Casey's Corner, introducing you to small businesses in the East Valley. Brought to you by Prosperity North Advisors, a Kendal insurance agency, protecting your prosperity.
Hello everyone, Casey Kendal, Prosperity North Advisors, a Kendal insurance agency, protecting your prosperity. Joining me today, Juli Doyle, Fairway Mortgage. Juli, thanks for being here.
Thanks for having me.
So, I've got your bio here. I'm going to read it because it's super important. I don't want to miss a thing, okay? So, Juli Doyle, Fairway Mortgage, 24 years in the mortgage business, 11 with Fairway, live in Scottsdale, and married 12 years, husband's an attorney.
That's correct.
And 3.5-year-old son, and your mom is 83, and she raised 5 of you.
Yep.
Did I get it all right?
You did.
Perfect.
Yeah.
Awesome. Well, thank you for being here.
Yeah, thanks. This is great. I'm excited.
Tell us a little bit about what you do, how you got started in the mortgage industry. I know you have a ton of experience. I've been really looking forward to this. So let's start at the highest level. Tell us about yourself.
Sure. For sure. So things that people always ask. Originally from Michigan, been in Arizona since 1995, been in the industry since 1998. And I have done multiple things in the industry, from processing to underwriting to secondary desk, drawing docs, negotiating contracts from broker to banker. I mean, other than owning a mortgage company, I've pretty much done it.
Wow.
And enjoy that. And it's one of the things that I think sets me apart is not only having an MBA in finance and all the designations I have, including getting my Series 7 and 63.
I do want to touch on that.
Yeah, is that because I've done all that, when I'm sitting with a client doing a mortgage plan, I'm pre-underwriting it in my head. I know what underwriting is going to ask for. I know how the loan needs to be packaged to be sold on the secondary market, and so it just makes me unique and a little bit different.
Yeah, absolutely. I think that when you're working with someone who's got that level of experience, you can really be set up for success. So, Juli, tell us, you mentioned a few things here, and so just with my experience, I understand what a Series 7 is, I understand what the 66 is, those financial designations, which I don't think I've ever met a mortgage broker who has those designations. Now, I also know what it takes to pass those tests. So, tell us a little bit about why that could be valuable for your clients.
Yeah, so the Series 7 and 63 actually allowed me, I don't hold it anymore, I passed it, but they're very expensive E&O as insurance, and I'm not practicing in that, but it actually allowed me to trade stocks and bonds, and mutual funds. I also had my health, life, and disability, so I could have written life insurance, right? I didn't do it for those purposes. I never actually went and traded those. I wanted to be highly educated to understand everything that I look at as a client, because as a mortgage planner, I am the only financial professional in their wheelhouse, in a client's wheelhouse, that gets everything, right? So if we talk about with CPA, you give your CPA your taxes, they may have some of your assets, but they don't necessarily know your debts and liabilities, your credit score, maybe your hopes and dreams. Your financial planner may.
So essentially, you're quarterbacking that, working with anybody who's servicing that individual or that couple throughout their financial experience.
Exactly. I've got everything. I can look at it and say, oh, you need to go talk to your life insurance agent or refer them to a life insurance agent because you're underinsured here. You might want to, readjust your 401k. Let's talk to somebody about reallocating that, right? And they go to a financial advisor for that. I would not give them that advice, but having all that background and education allows me to look at it very holistically and be a true mortgage planner and help them make really great decisions.
One of the things that I really like doing, and I've done this with others that I've met with, is busting up myths. So tell us a little bit about some of the myths that exist in the mortgage industry.
Sure. Oh, there's so many of them, right? It's like, when they say don't Google your symptoms when you're sick, like, don't Google your mortgage questions. You're going to
Everything is canceled.
It's canceled. What you're doing here is bringing, in experts for Casey's Corner, is just wonderful because, people can actually go to the experts. So don't Google your mortgage questions. There's so many misnomers. I had a client who said, I've got to wait until I sell my house to buy. Well, if you've got a mortgage plan, that may not be the case, I need to pay off, I need a 15-year mortgage, I've got to pay that mortgage off as fast as possible. Why? There may be reasons we don't do that, and it depends because, again, it's a holistic picture. We need to look at everything to say what's the best option. Why would you be in a 15-year mortgage with a larger principal payment if you're not properly insuring your family, if you don't have life insurance, And as you've had experts on here, and that life insurance just isn't a death benefit, there's lots of living benefits.
Absolutely.
So it's that kind of thing. We look at the holistic thing.
I think
I would refer that out.
I would actually take anybody to task that beyond the purchase of an asset like real estate, I would say the fastest way to grow or at least protect wealth is through utilizing life insurance.
That's what the rich do, right?
Absolutely. You are doing forward mortgages. Did I get that correct? That's like your traditional mortgage. That could be FHA, VA, or conventional.
Right.
Okay. Yep. But there's also reverse mortgages.
Correct.
I know that there's a lot of myths about reverse mortgages. You see, all you got to do is watch any of the big news channels for 12 minutes, and you will see 64 reverse mortgages commercials with Tom Selleck and everybody else.
Yep. And now the Fonz.
The Fonz. Yeah. So talk to us about the reverse mortgage. What are the rules? What are the minimums? Yep. And then why would someone choose that?
Sure. That's probably the most myths out there, and misinformation is on reverse mortgages. So reverse mortgages is a marketing term, and it's really more of you want to think in reverse than you would a forward mortgage. So the forward mortgage, when you make your payment every month, there's a principal and interest. The principal goes down, down, down. On a reverse mortgage, it's the loan of options. So you can choose to make a payment or not. So you can watch that principal amount that you owe go down, or you can not make a payment and watch it go up a little bit, or there's a line of credit attached to it. And what's very unique about the reverse mortgage is that line of credit has a guaranteed growth rate.
Is that different from a HELOC?
It's very different from a HELOC. So if we remember back to something that nobody wants to talk about, 2008, 2009, right? Everybody had these great big HELOCs available. A lot of people were using that as their safety net. I've got $100,000 I can pull from if something happens, $200,000. And what happened? The banks came along and said, values dropped, you're done. And they closed those HELOCs overnight. And people who were using that as a security no longer had that security, right? So with the line of credit on a reverse, it is guaranteed and protected by the federal government.
Backed by your house.
Backed by your house, and and it's guaranteed to grow. So no matter what happens with the real estate market, that line of credit's going to grow. So we use that as part of the overall financial strategic plan to know that that asset, the accessibility of that asset, is going to be guaranteed, and where's it going to go? So we may have a client that needs it now for, maybe need isn't the right word. They want it now. They want to do some remodeling, but who wants to take money out of the market right now?
Right.
Why would you not take out what is 99.9% of the time a tax-free equity and access to that to remodel versus trying to take it out of the market right now? Like, call your financial planner and tell them you want to take $50,000 out to remodel. They're going to be like, live with your kitchen the way it is, right? You call me and we're like, no, let's take it out. Interest rates are lower than inflation. Let's do it,
Sure.
And then have the option to not make a payment, right? So it really should be part of the financial plan, the asset buckets of planning, and the people get concerned. So you were asking about myths. People are like, oh, the bank owns my home. Well, on a forward mortgage, does the bank own your home? No. You own your home. You can buy it, sell it, refinance. You can do whatever you want. You leverage it, right? It's just as if there's a lien on the house, just like there is with your forward mortgage. So that's a misnomer. You do need to be 62 in most cases. We have some products for 55 years and older, but in most cases, 62 and older. I have clients who I think they call them December, May romances, where one spouse is significantly older than the other spouse. That's okay. We can still do reverse mortgages for and include that younger spouse in the mortgage planning space. So that isn't one reason to shy away. It's all about the information, the knowledge. You typically need about 50% equity in your home for this to make sense.
Okay.
And that kind of changes where interest rates are and that type of thing. But typically, if you've got 50% equity and you're 62, you should be looking at the reverse mortgage as part of your financial plan.
Can an individual or a couple purchase a house with a reverse mortgage?
Yes, and we actually are the number one lender for purchases with reverse. You will, in North or South Carolina, by law, you can't close a purchase in less than 20 days, but we do them on a regular basis in about 17 to 20 days.
Wow.
So it's people, agents will get nervous because they don't understand the reverse mortgage, or they had a bad experience with someone who isn't as good as we are, but we have a complete reverse division where everyone is focused on getting those closed, and the number one priority is purchase. You've
got to really be on top of your game when it comes to that reverse mortgage, and understand it inside and out.
It's a different animal.
Yeah, absolutely.
But it opens up a lot of opportunities for people to purchase that they think that they can't. So for instance, I have a client in Michigan. I'm from Michigan originally. I have a client in Michigan, and their home there's worth about $350,000. To keep the same lifestyle, to retire, move to Arizona, right? Get out of Michigan, get out of the winters. To keep that lifestyle, they have to buy about $600,000 here.
Oh, wow.
Right?
Sure.
So their house in Michigan's free and clear, good Midwestern people. We were born and raised, pay your debt off, pay your mortgage off. There's no other way. There is, but that's how we're raised, right? And so they've got this free and clear house, but they're like, I can't move because what I could buy doesn't get me the lifestyle that we want in retirement, right? Well, now it can, because they can sell that house in Michigan, take the $300,000 and put it down in a $600,000 home here in Arizona, never make a mortgage payment, have access to a growing line of equity, which protects them, because they're young, they're 62 and 65. It will protect them in 20 years when they need home health care, if they don't have the long-term care insurance, or it doesn't do enough, The one thing that I know from my research and hanging out with a lot of insurance agents and financial advisors is the most expensive years on this earth are our last 3, right?
Yeah.
And so a lot of times we're just letting that line of credit grow, because again, that growth is guaranteed. We know what it's going to be, right? We can predict that. You can't predict with a lot of things. We can predict what that's going to be. So we know, we say, hey, if we live to, my mom's 83, we're hoping she's here to 100, but we get to 90, what do we need? Well, we know how much is going to be available to do the things that we want to do to keep in our own home, so that everybody wants to stay in their home when they get older or they're sick.
Absolutely.
So there's
freedom.
So many different things we can do with it.
Yeah. I can tell you from firsthand experience that long-term care is essential, and I think anybody who has an older parent or even a grandparent should be considering long-term care, whether that's a standalone policy on their own or attached to a different policy, because that's expensive. That monthly payment on a long-term care facility will definitely have a comma in it.
So if you think of it this way, you're 62 and you're probably making, let's just say $2,000 a month in principal and interest payments, right? So it's $24,000 a year. At 62, if you don't have to make $24,000 a year in payments, what can you do with that? In 10 years, that's $240,000. If you just threw it in a savings account, right? Like, who would do that? But you could, right? Okay, so now, 10 years from now, when I'm 72, that's still really young. I've got $240,000 if I need it towards my medical health, my long-term care, right? Or what you were saying is, if I don't have to make a $2,000 mortgage payment, I can afford the long-term care insurance that I didn't think I could afford. So again, it's really, your mortgage plan is really part of the full financial picture. And, don't go online and use the calculators, because it doesn't take into the individual need of that family. And that's why what I do, the mortgage planning piece, the actual structuring and the quarterbacking, as you put it, really, I feel like I'm helping people. They make the decisions, I educate them, I show them what I would do. And that's how I look at clients is, if you were my sister, my brother, my mom, my dad, my best friend, what advice would I give you?
Right.
What advice would I give myself? I mean, my husband keeps telling me to slow down because I'm like, you turn 62 before I do. Let's get going. Let's get going, right?
Sign here, initial here.
Yeah, I don't know how he doesn't love that.
Last question on reverse mortgages, even though I could have 1,000.
Yeah, we can do it all day.
Is how do taxes work?
Taxes, yeah. So here's the thing. The equity in your home, and because I am not a CPA, I'm not giving tax advice, and 99.9% of the time, when you take cash out of your owner-occupied home, there's no tax on that. That's your equity. That's your money, right? So you pull that out. Of course, with a reverse mortgage, you still have to pay your taxes and insurance just as if your house was free and clear.
Sure.
So your property taxes, insurance, and if you have HOA dues, those need to be paid. A lot of
same manner as like an escrow account?
Yeah. So most reverse mortgages don't have an escrow account.
Okay.
You make those on your own, but if you're like, ooh, that scares me, we can set it up, what's called a LISA in the mortgage business, LESA, so that your taxes and insurance are paid on your behalf. But most of the time, we just teach our seniors how to make those payments on their own. And there's all sorts of strategies. I could geek out on how to help them, but a lot of times what we do is at the end of the year, they'll pull money out of that line of credit, they'll make their taxes and insurance payment, and they're done, right? So they don't actually have to deal with it in their monthly budget.
Perfect.
Yeah.
Now I know that I can feel your passion on the reverse mortgage, and I can definitely appreciate that. But you also have other passions.
I do, yeah.
And that's more geared towards the forward-facing, and in particular the veterans community.
Yeah.
So tell us a little bit about that.
Yeah. So for me, my two biggest passions, my biggest passion is helping, but my two biggest passions are seniors and our vets. I feel, in our current active military, I feel those are two communities that get used and abused and taken advantage of, and I want to take care of them, especially for our veterans. I don't understand signing a blank check and running towards danger. Like, as a human, that amazes me. Those are my superheroes, right? Like somebody that would sign that blank check,
Sure.
and do that. My nephew is a Marine. He separated in service. My dad was in the Navy, but I didn't grow up around a lot of military. And as I got into the mortgage business, I started finding myself with a lot of military clients and just amazed at what they do. And because they move around a lot, it's hard for them to come up with good, solid advisors in their life, whether it's a CPA, financial planner.
Interesting.
Right? Because they get bounced around, and they do a lot of the water cooler talk or the foxhole talk, right?
Sure.
With their brother in arms.
That's where those myths are born.
Yeah. So this way, they're getting the full service of mortgage planning. They're getting all those benefits. I can look at their VA benefits and what's going on in their financial house and help set them up, I have one client, he was in his 60s. I was the first loan officer. He had owned, over the years of being in the military and moved around, 10, 15 houses.
Wow.
I was the first loan officer in all those years to ever ask him if he served. So I have a designation. I am a military mortgage specialist.
That is so cool.
And it's not only do I understand the VA lending, but my drive is to continually understand more about what our military active and veterans need. Because how you communicate with someone who is in Vietnam versus somebody who was in Afghanistan versus somebody who never left the United States is completely different. I have to be very careful, for instance, when I speak to somebody who's currently in service, because if I ask them a yes or no question, the answer is always yes, ma'am. I need to ask open-ended questions and dig deep because they're used to just answering yes to authority figures, to a professional, to somebody who's an expert, right? So it's things like that. So it's just more than here's your VA loan, here's your interest rate, let's move on.
Right.
It's really serving that community.
Yeah. I don't know much about the VA loan.
Yeah.
But
VA loans are great. So VA loans are zero down, so the vet doesn't have to put a down payment down. Okay. There's no monthly mortgage insurance, but they do have a funding fee. That funding fee gets rolled into the loan. They don't have to bring it in. And depending on if it's your first use or a subsequent use, then it's a different amount.
let me ask you, because you just said something. You said subsequent.
Yeah.
Does that mean that you could? Okay. Does that mean that you could have two VA loans opened?
Yes. That's my secret. Most lenders don't know you can have 2 VA loans at once, and I'm not going to give my secrets away, but call me if you have a VA loan, you want to get another one.
That's worth the price of admission there.
You can. And a lot of people think they can only use their VA loan once. That's another myth. You can actually have those benefits restored by selling or paying off that loan with a conventional loan, have that restored, and you can use it again. But yes, you can have 2 VA loans at once. Most lenders don't know that, so that's my secret. I'm giving it out there.
Well,
call me.
I don't want to spill the sauce.
Yeah, the good lenders know how to do it, but yeah.
But I think one of the other VA loans myths that I've heard is you have to sell that house to another VA loan purchasing.
Yeah, you don't have to do that either.
Okay.
Yep. Yeah.
Julie, this has been amazing.
Thank you.
Really, really appreciate you coming down and sharing this information. What is the best way for an individual, whether they're looking for a reverse mortgage, a forward mortgage, a VA mortgage? We've covered it all.
Yep,
a lot.
we do it all.
What's the best way to get a hold of you? Yep. Where are you located?
So, well, I'm licensed in 10 states. The best way to get a hold of me is, phone. You can call. Phone number is 480-206-8742. You can email the team to get on my calendar at teamdoyle@fairwaymc.com. That's TEAMDOYLE at FAIRWAYMC.com. And you can also go to my website, which is www.julifairway.com.
I will make sure that all of that is right here. Julie, thank you very much.
Thank you. This was great.
I really appreciate you.
It was fun.
And I learned a lot today.
Good.
Thank you very much. If you'd like to be featured on Casey's Corner, please like, subscribe, share this video. Thanks very much. Have a great day.